Great question, Michelle. Chargebacks are what field producers, insurance agents sometimes have to deal with when they write a piece of business and that business lapses the following month. So an insurance agent will go out and let's say it's $100 a month premium, and their commission on that is $1,200 for the year. So the insurance company will advance them that $1,200 for their first year commission, even though the client's only put $100 premium down so far. The next month, if that lapses, all of a sudden the agent there is indebted to the insurance company for $1,100. And so it's a tough thing because the highest quality of business, the greatest business you can write, there's still going to be an element of that. And so that's one of the things that we help our clients with is insure against that and mitigate that risk through an income model and structure. So when we were talking the other day in a training, that's what we were talking about. But that's what a chargeback is. It's when you have a company that advances you your commissions, and then the following month or 2 or 3 months down the road, that business lapse, they don't pay their premium and the coverage lapse. And then now the policy goes, kaput. And so now you're on the hook for whatever the balance is from what they paid toward that policy versus what you got paid in commissions for that policy. And so you have normally a debt. And so you can get in trouble real quick. And the problem in the life insurance space especially is if you start building an agency and you start having sub-agents, you recruit an agent and they start going out and writing policies, and that business goes south, then if they don't write enough business to cover what they were advanced and just walk away from it, the insurance company will roll that business up to you. So now you didn't write the business. You had no control over it, but by virtue of you recruiting that agent that wrote that business that lapsed and they advanced those commissions, it gets tough. And here's what I never liked about that situation. Let's say, for instance, you get 100%, and so you recruited this agent and you're paying them 90%. So your asset there, your payoff is only 10%. So even though you're only getting 10% for what they write, if their business goes south, you're on the hook for 100%. So they got advanced 90% and you only made 10%, right? But then they walk away from the business and they can't collect with that agent. So the insurance company comes after you to collect that debt. And so they're taking it out of your commissions that you're writing, or you're going to have to write a check, but you're not going to write it for 90%. You're going to write it for the full 100%. So it's very tough. And that's why that's one of the things that you were probably seeing in that training, how we're able to mitigate that risk for agents, give them advanced commissions, give them residual income components like a lot of insurance agents and financial advisors won't, but without having that risk. So, but that's what a chargeback is, and I hope that helps.